Give us your pick and why.
Yeah, so SoFi is my pick for the last quarter of this year, heading into what's probably going to be their best quarter ever when it comes to earnings. And I actually expect, coming off the success of the Instacart IPO, which SoFi participated in, for them actually to raise guidance and have a little bit better story to tell now about what profitability is going to look like heading into the end of the year.
All right, so you mentioned this might be their best quarter ever. A lot of speculation about that, mostly fueled by student loans. But I want to talk to you about this. So, according to Bank of America, SoFi holds just about 60% of private student loan refinancing. And a lot of people right now are trying to refinance their deals. This is, possibly a temporary boost. Are you worried that after we see this wave of refinancing, that revenues and in just customer engagement with SoFi might significantly decline after this period of student loans returning?
Well, I hope you won't hold it against me too bad, but I'm actually going to disagree with you a little bit about them just being about student loans, because what we saw from 2020, basically, when student loans were paused and their bread and butter basically dried up on them, SoFi pivoted and actually started to become a traditional bank, more in the sense where now they're offering personal loans. They bought a mortgage servicer to be able to offer mortgages to their members. They also started offering traditional banking products, and because they're a digital bank, they're actually able to offer better interest on their savings accounts than most brick and mortar banks that have physical locations do. So aside from the student loans, they actually have done a very good job of beefing up their offering. And now, as I mentioned, we just saw for the first time ever them help take a company public and participate in the fees for investment banking duties, separate and apart from the SPACs that they had participated in before in 2021 and 2022 that weren't necessarily as groundbreaking as this one. So I think their product mix is diversified enough that even after student loan refinancings, whatever pent up demand there is has worked its way through the system, they still have the ability to show positive growth and that they're a legitimate player in the banking industry.
Well, Malcolm, I'm definitely not going to be mad at you. You're supposed to defend your pick. I also want to bounce something off of you that analysts have cited. They say rising yields over the last year could also create an issue of write-offs for SoFi. Of course, we've seen the 10-year rise dramatically over the last year, and other even shorter-term bonds rise dramatically that they say actually influence the loans that SoFi has.
I think that's a fair criticism. I think that the high interest rate environment that we're currently in is definitely a headwind for SoFi and any other banking institution, but specifically SoFi, who's not as well capitalized as like a JP Morgan or a Goldman Sachs or whoever. But I also think that because their deposit growth has been growing at the rate that it has, it's been pretty significant the last few quarters they've reported. Because that deposit growth is growing so well, they actually have the ability to back up their own loans and not have to rely so much on selling off those loans to secondary servicers the way they had in the last couple of years. So yes, the higher interest rates mean they have to be more careful, but it doesn't necessarily mean that that headwind is going to stop them from telling a bigger growth story, quarter after quarter going forward.
And you also mentioned they've become a digital bank. We've heard a lot about bank consolidation and people moving their money to the bigger money center banks. In your mind, is there any risk of that, of customers moving away from SoFi as just concerns about the stability of digital banks and regional banks could persist?
Not quite. I think SoFi has a little bit different target customer, right? They're focused on the millennial and the Gen Zer that they earn a little bit of credibility with earlier on in their career before they have really hit their peak earnings potential. And we also saw that again with the IPO, because these are the folks that they're selling shares of Instacart to, who are interested in participating in something like that. And so I think SoFi's target customer, one, has a tremendous amount of loyalty as far as the brand is concerned. We've seen that because almost every member they have has more than one banking product with them. But separately from that, because you're willing to refinance my student loans and relieve the pressure on me on a monthly basis from that higher payment that I once had, I'm willing to turn to you when it comes time to buy a house, buy a car, so forth and so on. And so I think that loyalty is going to matter more than anything else going forward for them.